Okay, so this is what you see. This is, the
40 मिनट की
structure
ऑलरेडी
of
गाइस.
your statement of comprehensive income,
इसके बाद सो
which we
जाएगी
also
तू?
call
नहीं, अपलोड
SOCI.
करूंगी यूट्यूब पे सब कुछ. अरे वो
It has
मेरा
got
फोन था.
two parts. This first section, which
ओ
is until
मत कर
here,
यार.
this is called profit and loss
अरे
account.
दरवाजा टेढ़ा हो जाएगा,
I
ऊपर
mean,
बोर्ड टंगा
until
हुआ है, हट.
profit after tax, you call it, income statement
फोन
previously,
देखेगा
so you
रात को.
called it profit and loss
तुम देख
account.
रहे हो तो बताओ, मैं भी
And
देखूंगा.
then this last part
हम नहीं
at the
देखेंगे.
bottom, that is for,
कब मैंने घुस के
other
मी
प्लानिंग
comprehensive income.
बाबू मी बाबू मी बाबू.
And together we call it total comprehensive
छोड़ दे.
income, the sum
चप्पल
total.
पहन ले बाबू, ठंड लग
And the
जाएगी.
name of the statement is
कर
called
क्या रही है
statement
तू?
of
अभी तक
comprehensive
क्लास
income.
है.
ये ले. क्या?
Now we need to understand it very clearly, because
ये
many
यूट्यूब की
times when you
वीडियो
will
है.
be
नहीं,
making
क्लास
your
है ये जूम
accounting
की.
judgments, I'm
अच्छा.
using the word accounting
हाँ, अभी सर
judgments,
आएंगे ना यहाँ
you
पे.
have to refer back to the format of this.
और बच्चे भी हैं.
तुम्हारे हैं
और
Now,
बच्चे भी आते हैं.
हाँ, इसको बंद कर, ठंडी हवा लग रही है.
again, what you should remember that this first part,
यार तू इसको मत
which is
चलाना.
until
ये
this gross profit,
और
what
आदमी
you call
बहुत.
this, it is called trading account. If I go back into details, this is called trading
पता
account.
नहीं कहाँ से आ जाते हैं
This
ये.
first section.
भाई जाने तू मुंडे खराब है ना कि वो तेरे
And this part,
चुल्लू
which
भर
is
पानी
until
में.
here,
जा तू
चुल्लू भर पानी में ऐसे कपड़ा पकड़
you
कर
call it,
सोने को कोई बहुत
You know.
पसंद है सोना सोना
एओ.
operating
सोना
part,
मुझे बहुत पसंद है
or you also call it
शादी हो गई है इसकी.
एंगेजमेंट हुई है शादी में
साल हो
Profit
गए
and
इसकी
loss
शादी को.
एंगेजमेंट हुई है
अबे चल, शादीशुदा आदमी है ये.
मेरे को बहुत अच्छा लगता है
so these two
शाम
things
बंगा सी काली
together,
नीचे बंगा
वो देख के
we call them
और तेरा
trading
इसको वो
profit
करो,
and loss
बाहर
account.
निकालो उधर से.
If you ask me the full name of this income
कैसे
statement,
सुंदर तो ये है.
traditionally we used to call it trading
तेरी शक्ल देख
profit
काली
and loss
कलूटी.
account. Trading the first part,
इसकी
which
शक्ल
is
देख.
until gross profit, and then profit and loss account. So its name was trading profit and loss account.
साथी से नहीं बड़ा ग्रेजुएशन
Okay.
हुई है इसकी
Now, what this income
कॉलेज भी
statement
कर रखी है इसने
it tells us? Income statement actually
पैंट तो संभाली
it
नहीं
tells
रहते.
us the financial
और
performance.
पेंडिंग से संभाली भी इसने वीडियो में
पैंट तो संभाली नहीं रहते.
I'm referring to
आए
very basics,
बड़े
but we need to see them once more. It's called financial performance. Financial performance means that ability to make profit.
मैं देखना इसके
So
पता है.
when you say that financial performance is good, it means that profit is good. So income statement, it tells us financial performance. Balance sheet tells us financial position. So we talk about financial performance. And how the story begins. The story starts like this, that let's suppose that there are a group of shareholders. They have a business, they have a company, so they hire one CEO, they hire one director, one manager, that you run this company, you run this business for us, go and do the operations and start working. So end of the month or end of the year will come in and you will tell us what was your performance and how much profit did you make. So the question which the director will say that, okay, if I have to run the business, how do
ये
I
किस
run the
खुशी में
business?
दरवाजा
What
खोल
are
के
the
चले जाते हैं
resources?
पागल लोग.
You give me something so that I manage your business. So they give them a balance sheet. So balance sheet, these are the resources. And of course the liabilities, against those resources. So the shareholders will give the key to the business along with a piece of paper, which is the balance sheet, that these are the resources which are available to you. You've got current assets in form of cash and inventories and receivables. You've got, non-current assets. So we are giving you current assets. We are giving you non-current assets. And with these resources, you go and run the business. And of course, there are some liabilities which are standing against those assets, and you will be paying off those liabilities as well. But we are giving you assets. So your SOCI, your income statement, if I talk about, so what does the balance sheet tells us? The balance sheet tells us the resources which are available for a business, and the managers, they use those resources and how effectively they will use those resources. The effectiveness of the usage of those resources will be reflected on the income statement. So income statement is, how do I see income statement? As the reflection of how effectively managers, sorry, what is happening with my keyboard? Managers use the resources. So the performance of the managers. So you can say that income statement will show
तेरे को और रह गया बहन
the performance
तेरे को तो नहीं 9 मिनट 70
of the manager, or you can call it of the management. Income statement is a reflection of one
इसमें कितना
year's
टाइम रहता है?
management's performance, that how effectively they have used the resources available to them on the balance sheet. Now, what we understood, that income statement will be a reflection. So when we give them the key, he goes and he starts selling the goods, or he starts providing the services. So whatever goods and services you provide, they will be appearing in this line of revenue. Now, and then all the costs they will start writing down, and they will calculate the profit. But there is an issue of presentation, how to present this activity. So during this our operations, we will be earning some money, we will be spending some money, and we have to show it on some proper format, and that format we will be discussing today. Now if you pay attention, the benefits, the economic benefits which the business is receiving, is actually, there is one more line, I would call it other income, and I put here also as X, and it's not bold. So these are the three lines where your benefits are coming in. Three line, benefits coming in are only three lines: revenue, other income, and other comprehensive income. And you must remember that what is the difference between these three. For example, if I talk about revenue, and then how is it different from other income, and how it is different than other comprehensive income. So you must be differentiating between these three. So revenue is, comes from your core activities, comes from the core activities. Core activities means that whatever is the nature of your business. Let's suppose that you are a furniture showroom, so you sell furniture, you get some benefit, they become revenue. You are probably a factory which makes textiles, so it is there. You are a construction company, so every time when you construct a project, you make some house, you make some apartments, you make some building, you get money, that is called revenue. Revenue essentially comes from your core activities,
क्या?
and it goes there. But the business, it gets benefit from other sources as well.
भाई ये
It
सही
is
से ले
not
ले
only from
हाँ
the
सही
core
से ले
activities.
रही
You
दिख रहा
may
है
be
ना अपने
getting
पास सही से ले
benefit
रही
from
है
other sources
नहीं
as
ले
well.
रही मुझे अगर मैं स्नैप के
So
पास
those other sources should not appear in revenue.
बट जब तक ओटीपी नहीं आ रहा
They should be either other income or other comprehensive income. In other income, we will say
आजकल ओटीपी
that
मांगता है.
not core activity,
और बिना ओटीपी खुलेगी
but somehow
नहीं खुलेगी.
related and
कैडी खुली नहीं है
under control of management. That's very important. That it is not related, but somehow related and under the control of the management. They are under the control of the management. What do I mean by that? Let's suppose you are a construction company. So every time you make a house, you make an apartment, you sell it, you get money, that is called revenue. Your business is to make apartments, and you are making apartment, it goes into revenue. But then what happens, that one particular day you notice that you have some extra equipment which you are not using. Maybe you have got some excavator, maybe a forklift or something, and that extra equipment, you said, instead of keeping it idle in our premises, we are not going to use it for the next 3 months, we don't have project, let's give it on rent. So you take the and you give it out on the rent, and you earn some money. Now when you get this money, you should remember that Giving equipment on rent is not your core activity. Your business was never established to give equipment on rent, but you did give equipment on rent and you get some money. So you put it in other income. You can't put it in revenue, but you put it in other income. Rental income comes in other income. Now, why do we put it in other income? And or you can ask that what is the difference between other comprehensive income and other income? Now, that is something which you need to understand. Please remember this part until here, PBIT, or let me draw
कितनी
it
चलनी है खत्म
properly.
हो गई क्या खत्म हो
Let
गई
me draw it
बाथरूम जा
properly.
रही हूँ
The manager whom you gave the keys, he is responsible only until this part. You should remember that. Below that thing, below this point, the manager may not be held responsible. Manager is responsible, your performance will be measured. So therefore, whenever you do any ratio analysis, you have done any, interpretation of financial statement, you always talked about this profit, PBIT. In all the ratio analysis, you use this profit. You never used profit after tax, or you never use total comprehensive income. You don't use them. You only use this much, which is called PBIT, profit before interest and taxes, because this is the area for which the manager is responsible. So manager, if there is any expense as a result of his decision, we write down here. If there is any income as a result of his decision, we write down here, because this part is the part where manager becomes responsible. So these are the areas which are directly with the manager's decision making. And this equipment which I give it on rental, it was me, I am the manager, it was my decision. And equipment, it brought $5,000 as rental income, and probably this equipment could have been staying there in our premises. I found the customer, I gave it on rent. So this 5,000 which comes in should be added in here, so that this PBIT should go up, because me as a manager, I'm always looking at increasing this PBIT, because this PBIT is the line for which I am responsible. So whenever you will calculate my, ratio analysis, how good or bad I'm doing, or how good or bad the business is doing, you are doing it on PBIT. So all the managers are focusing on increasing this PBIT. So I would take the credit, this rental income of $5,000, I will add here, so that it is added up here. So this is, and plus, there is one more reason. Reason is that this equipment was on our balance sheet and its depreciation was also somewhere here. Depreciation I was also writing down. So because I'm writing down depreciation, which is an expense, I just try to give this equipment on rent to get some earning. Because you know what? If you had not given it on rent, depreciation would have been at its place. Depreciation, you were still charging $10. Whether you give it on rent or you don't give it on rent, you are charging depreciation and your profits were going down, because equipment was not being used, equipment was not bringing any benefits, but the cost was going into the income statement and profits were going down. So I was worried about this situation. So what I did, I immediately gave it on rent and started earning very little money, maybe $12. So I'm not earning a lot, I'm just earning 12, but I'm just covering my depreciation expense so that my profit does not go into it should not be negatively impacted. So it was my decision to give it on rent and earn that extra money, $12. So I put it here. So other income is not your core activity, but it is somehow related. Related, why do I say? Because it is the same equipment, and the depreciation of this equipment is also here. So it is related, and it is under the control, and it was under my control. I took decision. If I had not taken this decision, we would not have made this money. So this is other income. Then comes your last thing, which is called other comprehensive income. Other comprehensive income, now trust you me, there is not any clear definition given by any IAS standard. I mean, you can go and see there are many theories. Like I told you in last lesson, that sometimes on some issues IAS or IFRS is silent. They give you some direction, and you have to make a judgment. So it is not clearly defined. Like they say that in revenue, it should be core activities. But in other comprehensive income, what it is, there is no clear definition. Yes, you can, assume something by the behavior. They are not saying, but you can assume something by the behavior. So what you assume usually, there are two point of views. One is that in other comprehensive income, you write down unrealized gains and losses. Unrealized means that any gain or loss which has not been converted to cash or which is for some future period, which is not realized. A very common example of that is revaluation reserve. When you do revaluation of your non-current assets, it is still on the books. It is unrealized gain. So revaluation, for example, if you do, it comes to unrealized part in other comprehensive part. And also another understanding which I also use a lot in my own perception is that it is beyond management's control. Okay, two things. There are two ways of seeing what comes in other comprehensive income. Number one, that it is unrealized losses and gains and losses. And number two, that these are the events which are beyond the control of management, because this part is within the control of management. Like for example, if you've got a house and the house price, it goes up, it was not management's decision. If you had some foreign exchange and you made some exchange gains, it was not management's decision. So exchange gains, exchange losses, revaluation stuff, this all come into other comprehensive income. You can assume any two of them, any one of them. It could be, you can consider it as a segment or a portion where you write down unrealized gains and losses, or you can think like that this is the area where you put down the numbers which are beyond the management's control. Okay, so we discussed revenue, other income, and other comprehensive income. We understand that these are our economic benefits and how we should be putting them, how we should be
क्या
reflecting them. So that's clear, it's not an
उसमें
issue.
बैठे हैं अंदर
Then comes your expenses. And as we have discussed earlier as well, that all your production related expenses will come into cost of sale. Anything which is related to the production process will go to cost of sale. So your process starts from here, it go like this, and here production finishes. The good is ready. Whatever you spent in this area, all of that is cost of sale. It could be production manager's salary, production people's salary, depreciation of the factory, insurance of the factory, raw materials, transportation inward, raw material warehouse, custom duties, everything should be here. Depreciation of equipment, insurance of equipment, everything should be here. And
क्या
even when you will do
है
your, you know,
तो क्या हो गया
how to say,
12:30 बज रहे हो
revaluation, which we do. So when you do revaluation, now that's very important thing. Now that is how I'm going to relate. When you do your revaluation of non-current asset, so let's suppose you have a factory equipment, you have some machinery and you revalue it, or probably you have some factory building, you revalue it was 1 million, you revalue to 1.5 million. Now when you increase the value of equipment or value of the asset, your depreciation will go up. You should remember, because before you were calculating depreciation on 1 million, now you will calculate depreciation on 1.5 million. So you will have more depreciation. And this additional depreciation will go into cost of sale. So it has got a very fine relationship. So you've got 500,000 of revaluation, okay? 500,000 revaluation you are
हीरोइन ही
doing.
नहीं है ये
And the life of the asset is, let's suppose, 5 years.
सर उठना है
So it means that there is an additional depreciation of 100,000. And that 100,000 will be added into the cost of sales. So anything which is related to production process should go into cost of sale. And that could be material, that could be labor, and that could be any other expenses. Then there is one more thing, that within this cost of sale, you
वीडियो
are
करेंगे
showing all of your production expenses. And production does not necessarily mean that you are manufacturing. Listen, production and manufacturing are two different things. Manufacturing means manufacturing of physical goods. But when you say production, it means production of goods or production of services. So whenever I say production cost, students, they immediately
कितने
think
जने
that we
हैं?
are talking about some metal, some wood, some
हैं?
bricks, or some, physical, tangible things. No. Businesses, they produce goods, and businesses, they also produce services. So even a service business will have production cost. You are a bank, you have production cost. You are a university, you have production cost, because universities, they produce services. So never think like when I say production, it means goods. It could be production of services. If you talk about a university, so universities, they give salaries to teacher. So teachers' salary, teachers are production workers for a university. So when you give salary to a teacher, it goes to cost of sale. When you give salary to some accounting department of the university, that goes to administrative expenses. Similarly, your university has, cafeteria, corridors, office block, administrative block, and classrooms. The classrooms, these are called production floors. The classroom is the production area. So if you are paying rent, you calculate the rent for the square meters used by the classrooms. They go to your, how to say, cost of sale. You have a hospital. Hospital also has production cost. Your operation theaters, your wards, your rooms, where you provide service to the patients, must go to cost of sale. Nurses, cost of sale. Doctors, cost of sales. But then you have some cashier in your hospital, accounting department in your hospital, marketing in your hospital, they are administrative expenses. So this thing you should be clear about the cost of sale. And by the
So,
way,
sir, I also okay, cost of sales, nurses, and this will be administrative in
no,
administrative expense.
no, nurses, they produce services. They provide service. They are producing services. Even if you have some operators for x-ray machine, people who are doing x-ray, that operator is also production worker, because he produced service. He produced one x-ray, and customer is paying for x-ray. So when you charge, $20 for an x-ray, that's the selling price of x-ray. There must be a cost of x-ray, and cost of x-ray will include the x-ray film, the worker staff who spent his time, the labor cost, and the depreciation of the equipment, and the electricity used by the x-ray machine. That should be the cost of your doing one x-ray. So cost of sale includes all the costs which are associated with the production of goods or for the production of services.
Sir, what if the X-ray machine is revalued? So we will charge the revaluation cost of sales
No, not
because that.
revalue. If it is revalued, revaluation not will come, but as a result of revaluation, depreciation will increase. And that additional depreciation will come to cost of sales.
And sir, what about revaluation? उसको कहाँ charge करेंगे?
वो तो asset में जाएगा ना, revaluation, that would be revaluation reserve, that will go to asset, but the depreciation of that asset will go to cost of sale.
Okay, fine.
And then you put note 1 and note 2. I mean, every business, when you prepare your, like, you have revenue. Now your revenue is, I don't know, $100 million. You provide different type of services. You are a hospital. You have different, you have different departments. You have gynecology, you have cardiology, you have neurology. I don't know. You have ENT, you have physiotherapy. You have 10 different departments. Your total revenue is 100 million. How do we know that how much revenue is coming from which department? That information will be provided in note 1. When you see the financial statements of some company, a good business, a normal business, their financial statements are approximately 100 pages. It is a set of 100 pages in which there is 1 page for income statement, 1 page for balance sheet, 1 page for cash flow, 1 page for, changes in equity, and 96 pages are for the notes. So these are the notes. If you do not see the notes, you don't understand. I mean, this is notes. So note 1, note 2, note 3, note 4 on income statement, and then on the balance sheet. I don't understand where this 100 million is coming from. I go to note 1 and the breakup will be given. I don't see the cost of sale of 45 million, where it is coming from, what is included in the cost of sale. You go to note 2 and all the entire breakdown will be given in the note 2. And you come to gross profit. This part purely is called trading account, which means buying and selling of goods or producing and selling of services. So buying of goods and selling of goods, let's keep it very simple, or production of goods and selling of goods. Then these are the areas which is called administrative part. These are non-production things. Now, these are also the expenses incurred by, and then you put, sorry, the other income we already have discussed. Then you come 3 lines. Usually we have 3 lines. You may have 100 different types of, your expenses, but you cannot put all 100 expenses here in your, how to say, income statement. You don't have so many lines. You've got 3 lines for that. At the max, if you want, make it 4, but 3 are enough. You can make it 4 lines. So you start grouping, like, your salaries and rents for office, head office salaries, head office rent, which includes accounting and HR, head office vehicles, head office, electricity, and et cetera, et cetera. All the administrative non-production will come into admin. And note 3, you've got here something like 10 million of administrative expenses. So what is in this 10 million? Go and see note 3. And then you have distribution. Now, in some companies, you have distribution, and in some companies, you may not have distribution. For example, if you are seeing the financial statement of Coca-Cola, they will have distribution expense because they distribute goods. But if you are making the income statement for a bank or for an insurance company, they may not have distribution expenses because they don't distribute the goods. But then they may have some other category. So this is not compulsory that distribution should be there. Admin is always there, but you may see distribution or you may not see, or you see something else. And then whatever you cannot classify in these two, you put it here. But one thing you should understand. Now I'm coming back to the main, my actual point, which I want to, emphasize on, that this section, this is purely happening as a result of the management decision. This is because management, he generated his efforts. He thought about the strategy, how to sell the goods or services, and he sold goods or services. And these are the costs which he incurred. He decided how much material to purchase, where to purchase. He hired the people. He is doing admin expenses. He is doing distribution expenses. So all these income and expenses, you see it as those income and expenses, which are coming in or which are incurring, which are happening as a result of management's decision. So if I am a manager, I'm very much careful about this line. This is my concern, because end of the year, my bonuses, my promotion, my performance will be assessed on this number. Because these numbers, they are the below part is beyond my control. I already explained you why beyond my control. You see this one you understand, other comprehensive income. I told that this is beyond my control. I wrote it here. But what about the finance cost and tax expense? Are finance and tax expenses also beyond the control of management? Yes, they are. They are. Why? See, you are a head office. You've got 2 managers, manager A and you've got manager B. And you give 100 million to him and you give 100 million to him, or 10 million, 10 million, whatever you may think, if you don't want to make numbers big. And you set them up, you say, go and do the business. Go and do the business. So this manager A was sent with this money to UAE, and this manager is working in probably, I don't know, in Europe or in Pakistan, let's call it. Now what will happen? End of the year, this manager A will come up with a 17% profit, And this manager B will come up with a 12% profit. And then I start comparing. I tell this manager, listen, B, you are not doing good. You know, you are into the furniture business. A is also into the furniture business. From the same furniture business, A is making 17%, you are making 12%, you are not doing good. You know what B will tell me? B will say, sir, you sent A to UAE. In UAE, there is no tax. So you've got, they don't pay taxes. We have to pay taxes because you sent me to Pakistan. In Pakistan, we have to pay taxes, which he was not giving. So this tax expense here, this tax expense I have to give. And I just scrolled it up. Actually, it was like this. I just scrolled it here. And similarly, so tax expense I am paying, which he was not paying. And then you finance cost. In UAE, you can find loan for 6%. In Pakistan, they give me loan for 11%. So I am getting loan at a very high interest rate, and I am paying taxes at 20% of corporate tax, whereas in UAE, he is getting cheap loans and he is getting no tax. Therefore, you cannot compare my 12% with 17%. I say, okay, I understand your point. You are justified. I should not be comparing this number. Okay, let's compare this number because this is the number which is before the tax and before the interest. And this is called operating profit. Operating profit means profit from the operations exactly, the net result of operations, because these are not operations. So I say, okay, he sell furniture, you sell furniture, you both of you sell furniture. So let's see how much do you get by selling furniture and how much do you spend for getting this money. So manager's performance is always based on this number because taxes and interest rates, they are different in different countries, and sometimes managers cannot do anything about that. And you remember the rule of performance management that you should not hold responsible someone for something which is beyond their control. If a manager cannot control something, he should not be made responsible. You are only responsible for the things which are within your control. And what is within my control is only the first part. Okay, what is in my control is only the first part. So I am only responsible for profit before interest and taxes. So this is something you should remember. Again, one more thing comes to your knowledge, that managers, I said that I gave the key to the manager, go and run my business and I will check your result. So which result we will check? These results we will check. Then comes finance cost, and then comes tax expenses. So this is the area which is beyond the control of the manager. This is the area which is within the control of the manager. What it has got to do with, it is related with revaluation, it is related with impairment, it is related with financial instruments, it is related with provisions. All these standards, when I will be teaching you, we will be always talking about if there is some expense, where should we write it? If there is some gain, where should we write it? Because it is possible that you make a gain. Where do you write that gain? Do you write that gain in other income? Should it come into revenue? Should it come into other income? Should it come to other comprehensive income? For example, you make a gain, you make a loss on, I've not taught you impairment, but we will discuss impairment and other things. So we make any gain or loss, where should we show it? So if we do not understand the structure of financial statement, then you will always have to remember, oh, it goes to OCI. It must go to OCI. No, maybe in P&L. No, maybe in OCI. Because you never understood the logic. You just tried to remember. But once you understood the logic and you keep it on two criteria, if it is realized or unrealized, or if it is beyond or within the control of management. Within the control of manager, put it here. Beyond control of manager, put it here. So every time you have to take decision. Like in previous lesson, I was telling you that there are many things which are written in the standards and there are many things which are not written in the standards. Managers, they must make judgment. So judgment is done in financial in financial reporting. Okay, so let me now clear all of that. So we understood our statement of comprehensive income structure. The first part, we call it profit and loss account. So if I ask you the word, if I say the word profit and loss account, I am referring to this part. This is called profit and loss account. And together, all of that will be called statement of comprehensive income. And so anyways, you get your profit after tax, then you say other comprehensive income. And you should also remember that other comprehensive income always comes as a net amount. I mean, you made some income, it is income. On income, you should pay the tax. So if you have to pay the tax, where will you write down? There is no line for the tax because tax we wrote here above. After this, there is no tax line. So what should I do? So it should be net amount. Net amount. Either you show it net amount or you show it like this. For example, let me write down the two possible options. How do you show this part? Okay. Okay. I'll put it here like this. Formatting. Little bit crazy for the formatting. I'm sorry, but I can't help myself. Okay. So let's suppose in other comprehensive income, what do you have? And I will put one more line. So you made a revaluation gain. Let's suppose that you made a revaluation gain. We said that revaluation gain, it comes in other comprehensive income. So we had a revaluation gain. How much revaluation gain we had? We had a revaluation gain of, let's suppose, 100,000. So that's other comprehensive income. I'm putting it down. But then you have deferred tax on that. If you remember, whenever you make a gain, there's a tax liability which is coming up. And because it is on revaluation, you don't have to pay the tax immediately because you have not got the cash. You have not received this income. So you don't pay the tax now. You will pay this tax in future. You call it deferred tax. We will talk about it in IS 12. When I will teach, I will explain. But right now, just this thing, remember that you made a gain, which means it is an income. And on income, you must pay the tax. But this tax you should not pay now because you are not getting this money now. You are not selling the asset. It is still on the balance sheet. When you will sell this asset, then this gain will be called realized gain. So far, it is unrealized gain. And if it is unrealized, you don't need to pay the tax. You can calculate it, but you don't have to pay it. So tax is, let's suppose, 30%. So you should write down here, minus 30,000. You should be showing it like this. Either you show in two ways that this is the gain and this is the tax on the gain, or you can write down the net amount, 70,000. You can show the calculation. Where did you come to this 70,000? You can show it that I calculated it, note 7, I will make it, for example. I don't know any note. I will call it note 7. And in note 7, I will show 100,000 was revaluation gain. This much was tax. Net is 70,000. So these are two ways of doing it. Okay. So this is your total comprehensive income. Any question until here?
No, sir.
नो सर क्लियर
Okay. Clear.
मुझे मत दिखा, मुझे कोई शौक नहीं है तेरी लाइव में आने का जब 2 जने नहीं है।